Hello, everybody, and welcome to the MakerDAO Scientific Governance and Risk Meeting, number 127, taking place on Thursday, February 4th at 1700 UTC, as usual. My name is Donker Wisdom. I'm the governance facilitator for MakerDAO, at least at the moment. And yeah, as usual, we've got a bit of an agenda to get through. We'll have our regular updates from the usual suspects. I believe we've also got a segment later from Seb Ventures talking about the financials of MakerDAO in January, which should be interesting. So I guess I'll just do some preamble. We kind of like when people get involved and interact in this call, so feel free to interrupt and ask questions if you want to. No one's gonna tell you to shut up, at least not immediately. So yeah, I think pretty much covers the intro. Let's see. So first up on the weekly updates, I guess we've got governance, which is me. So there haven't really been any major governance updates, I guess, over the last week. Main thing is I posted a set of core units of proposals for a governance domain, or I guess a governance core unit. So they're now in the forum. There'll be an RFC for the next month, and then we'll go into the March cycle. So please do read them over and leave comments. Again, the RSC period is kind of made for this. So if there's anything people object to, we can think about changing it. In terms of, I guess in terms of other updates, like I said, there's not too much. We had 4 polls last week. I believe at the start of this week, I believe they all passed. Yep, so that was onboarding polls for the DAI USDC, Uniswap V2 LP token, and the ETH USDT Uniswap V2 LP token. So those both passed, and I believe will be in on Friday, though we should check the smart contracts when it's their turn. Then we also had an Oracle poll, creating multiple oracles for DYDX on Starkware, which also passed. And then we had a poll to investigate the implementation of an ETH-C vault type with a higher liquidation ratio, which also passed. So yeah, it's kind of good to see. Next week we'll have more polls as usual. We'll have the rates proposal poll, along with probably some more onboarding polls as well. So look out for those on Monday. So I think with that, we'll turn it over to Pros to do governance at a glance and kind of give everyone an update of what's been going on in the forum. Pros, you good?
Absolutely. Post the link here in case anyone wants to read through while I talk. As far as the general things going on, DAI supply and demand continues to grow. We're sitting above 1.75 billion. Our stability buffer is growing. When I started drafting this, we were just under 6 million and we remain there, but looks like by tomorrow we should be crossing that threshold. So that's for a surplus buffer or stability buffer. I'll have to edit that. Anyway, our DAI VWAP is again holding steady, 1.001. Always like to see that. Do have some announcements on the forum in case you missed them. Anna posted a really awesome January Maker governance review. It's a great place to click and see everything we've accomplished last month. Sure does add up quick, so maybe some posts in there that you forgot about. Then the rates group also published some new recommendations. Those will be on the poll for Monday to be included in the executive, so take a look at that post if you haven't seen it yet. As far as active discussions in the forum go, we do have a couple neat ones that are drawing a lot of attention, at least. The first one being a post about utilizing under-collateralized loans in Maker. Basically, our entire lending model is built out on over-collateralized loans, and this is saying maybe we can come in with a new one. So go ahead and leave your thoughts and opinions there. The core units I wish existed post from IMEO is getting a lot of traction, a lot of really great ideas in terms of units people think the DAO should have. So A, I recommend reading through everyone's thoughts so far, and B, maybe you have your own you can drop in and get some people thinking about. As far as signal requests go, few carried over from last week from Tim, who's on the call, with the DSR, the die savings rate, and adjusting the surplus buffer. We do have a new one from Tim, though, which is increasing the ETH-A DCIAM line again. Basically, it just noted our latest executive kicked the line up, and we're currently at over 1 billion die issued against ETH, which is pretty exciting. Then you do have one last day to give your input on again, IAMDC parameters that Promosh put up. That will again be heading to the polls on Monday. So if you do have feelings in terms of how high the line should be set, make sure you get those cast in before tomorrow. And yeah, that's it for me.
Great, thank you for that, Chris. Yeah, I was kind of just do the usual sort of banging the drum on signal requests, right? Like it's kind of the best way for people to provide feedback on some of these things early. So please do vote if you haven't already. All right, so now that covers governance. So let's maybe move on to smart contracts. Chris.
Yep. Hey everybody, Chris, smart contracts domain team. So last week we did the executive for the DC instant access module for FA, and that passed successfully. We've got 2 collateral assessments we just finished for next week. So that's Uni V2 Uni F and Uni V2 Link F. So both of those Uni LP tokens. We've been working on the DSS exec-lib a little bit, and let's see, we also put a ton of work in on the MIP 45 for liquidations 2.0. So if you guys check the forums, or if anybody's got a link, they can drop that for me now. That'd be awesome. So we probably have, because it's in the RFC phase, we've got like what, maybe 2 to 3 weeks that we could make some changes there. So if anybody sees anything, wants to comment on something, now's the time to do it. So for the coming week, I'll say we're still sort of tentatively MIP 21 or 22 may or may not make it to Covan depending on reviews, but we're reviewing both of those as we have time off of liquidations 2.0. And for the Friday executive, so this Friday's executive, we're going to have Uni V2 Uni F and Uni V2. Sorry, this is next week. Uni V2 Uni F and Uni V2 Link F. And we still need to work on an assessment for Uni V2 Ave F. Yeah, I think that's about it for all of the smart contracts work, unless anyone else on the domain team wants to add anything.
Cool. All right. Any questions for Chris?
Yeah, so last night I published the Oracle assessments for Uni ETH, Link ETH, and Aave ETH. I still have one more coming, which is the CF drop assessment. I also deployed the oracles for the collateral types that are going out this week, which is ETH USDT and USDC. So we're pumping on all cylinders.
Sorry, carry on, Nick.
No, that's
oh, you'd finished it, my bad. Okay, cool, all good. All right, yeah. Any questions for Nick? Feel free, or we can ask them at the end. All right, so I guess with that, let's move on to risk. pretty much.
Yeah. So in regards to collateral evaluations, they're still mostly focused on uni LPs. We're publishing uni ETH, link ETH, uni LPs evaluations this week, which means we could onboard it next week. And we're proceeding to Aave ETH and potentially Wi-Fi ETH uni LPs evaluations next week. We published the first batch, as was mentioned, of depth ceiling instant access module parameters for 6 major vault types. I made a signal request on the line parameter, so that's the maximum depth ceiling parameter with some proposed numbers. So as pros mentioned, winning votes will go into on-chain poll next week. And then next week, we're planning to release the last batch of these parameters for other vault types. So we could have most of them covered. The only thing that was discussed was whether we should already implement depth ceiling instant access module for Web Bitcoin already in tomorrow's executive, because we might hit depth ceiling before the end of next week. But there is still 35 million unutilized depth, and it's not growing as extreme as for ETH, so we may be probably fine. But we also can't exclude it, right? So I'm here mostly leaving this decision to Long for Wisdom, because this could also have some implications for governance as well. And then, as was also mentioned, Rates Group released monthly rates proposal. We proposed a modest rate increase for major vault types, but we included some sort of a forward guidance where we considered possibility to make additional rate increase before the end of this month, especially if we still see extreme depth growth on ETH. So please comment on proposed changes and stay tuned in case we might need to propose another rate increase before the end of month, in case we're still witnessing this growth. Yesterday, we also released sub-proposals for risk score unit mandate and the budget. So also please see that proposal. Let us know if you have any recommendations on the structure that we have in mind and the budget that we proposed. And then finally, we started studying liquidations 2.0 tax specs. So we can propose governance parameters in time, and there's plenty of them. So yeah, we need to do that before they go online. And we are also looking into ETC vault type. So that's the vault type with high liquidation ratio. This was, as was already said, supported by maker holders this week. So we propose some potential liquidation ratios and risk premiums for this vault type in case we might want to implement it soon, which could be beneficial actually, especially if we want to move some of this depth growth on ETH towards safer ETC. And this could also play out okay if especially if we start considering high rates on ETH. So that's it from our side.
Great, thank you very much. I'll just briefly talk about WBTC. So we kind of discussed increasing the line this Friday if there was a kind of like an obvious need for it. I don't think we're really in the position where it's like an obvious urgency, given that WBTC hasn't been rising as much along with ETH. So I think in the absence of like a clear reason to do it early and to kind of skip parts of the governance process, we should just do it next Friday, assuming the poll passes, right? So yeah, unless something like meaningfully changes before tomorrow, I think that'll probably wait till next week. All right, so if there's no questions for Primož, we can move on.
Okay, so for real-world assets, I have 3 updates. One is that we have published for the future core unit, real-world finance core unit, our first reporting, which is an experiment to provide some transparency on what we are doing inside the team. So you can read it if you want and share comments. The second update is we are moving forward on people companies. It was green lighted, if I'm correct, last week. And we are negotiate with them new terms because we think the loan to value of 18% was a bit high, and we are trying to find a new solution. So if you are interested with the details on that, please ping me on Rocket Chat because I can use your feedbacks on the negotiation. And the last one is we are still working on how to scale real-world assets. So we don't have any problem to see how it's possible, but we are figuring out the details, like using asset manager instead of only asset originators, and working on how we can use some trust instead of using SPVs managed by the asset originators themselves, which is an issue for a lot of people, and we agree on that. When we will do some bigger investment, it will requires more safety. And that's about it. If you have some questions, feel free to ask.
Just a quick note on the 6S side as an update for where we are on that is stay tuned in the forums. Probably the next 2 weeks, you'll see a whole lot of content in there, everyone.
Cool.
Awesome. All right, yeah, thank you, Seb. Yeah, it's kind of exciting to see all that move forward, Matt, as well. Looking forward to getting that.
I need to work with you on how we're going to publish so many documents. We'll have to figure that one out.
Sure, yeah, get in touch whenever. All right, so that brings us to operational support. So Juan and/or AB, whoever's turn it is, feel free.
Yeah. Yeah, quick update from our side on the collateral onboarding calls. Yesterday we had Reino from Real World Assets. The video is already on YouTube if you guys are interested in checking that out. And next Wednesday, we're kind of skipping the collateral onboarding call and we'll have Know Your MIP number 5, since it talks about the integration with Yield Protocol. The week after that, we're going to have Fortuna 5 from Real World Assets again, so that's the 17th. Regarding the Know Your MIP, this Friday, so tomorrow, Pros and Sam are going to be discussing the KEG. So that's Know Your MIP number 4. So join us. I'm not entirely sure the time as of now. I don't know if someone can check it out. And then on the, well, as I mentioned before, this coming Wednesday, we'll have MIP number 43, TLM, so term lending module. So Alan and Lev are going to be discussing this MIP. So please join us Wednesday at 6 p.m. UTC. Yeah, moving on to the core units update. As the teams have already mentioned, risk, real world finance, and governance have posted their proposals for comments. So they're already in the forums if you want to give feedback on that. And we've already seen other proposals being drafted. So especially Derek, he drafted 2, one for smart contracts and another one for front end. Apparently he does them in his free time. So if you want your drafted by Derek, reach out to him. And yeah, then we have strategic communications, PR, and marketing. That was from Kathleen or Kathleen. I don't want to butcher the name. And finally, Amy and myself are drafting one for ops support. So yeah, if you can contribute, giving feedback on those. Some of them are more public than others. Yeah, again, if you're thinking about doing a core unit or joining one, there's as resources, we have the core units that I wished exist by Mio. Then there's the too long didn't read core unit submission process from Amy. That's another post. And finally, we have the channel on Rocket Chat, core unit operating model onboarding. So if you need help or want to discuss anything, please join us there. And finally, there's regarding the public events from Maker, there's this Google Calendar that you can add using this link that I'm going to post in the chat and potentially. Okay, Amy did it. So yeah, if you want to be in the know, you can reach us over there and see what's happening with MakerDAO, or as always in the forums. I don't know if there's any questions or comments.
Just a comment about the call you had yesterday, Juan. It was a tough crowd, the Reno. So anybody who hasn't watched that should check it out. It's good to see the community come out and really hammer down on a MIP6 that it's not easy to understand. So it's a really good video. Wanted to ask real quick, do you guys think it would be a good idea to have a core unit for a Clubhouse? Just to get Maker a little bit more attention.
Core unit for what? Sorry, I missed the
Clubhouse, the app. Because I was thinking you could promote it, right? And actually, Nick, I saw you on there. So you on there, maybe you could start the room. Or Anna,
yes.
I saw you too.
This is a question that. So I think that core units in general should focus on providing value, regardless of the mean that they use, right? So if the Oracle's core unit think that they should do something on Clubhouse because that provides value to the DAO or the wider community, by all means, this might be a great idea. But I don't think that we should create core units around tools or mediums in general. But then again, it's whatever the DAO wants and whatever the Maker holders want. So if someone has any crazy idea that any of us disagree with, but the Maker holders agree with, by all means, please go ahead and publish it. It's going to be a blast.
Yeah, no, I was just being sarcastic, but I really do think that it's a good tool. It's getting popular. It's taking off like crazy. And I've been noticing a lot of the other projects going on there, DeFi projects going in there and just talking about what they're doing, blah, blah, blah. So I'm just wondering if, some of us can get together and maybe start, I was being sarcastic about the core unit, and start something like a Clubhouse. And I think, Juan, you'd be good at it, to be a moderator, or anybody else here. You guys might want to nominate. But yeah, it's just getting a lot of traction. I think it'd be a good way for us to get the word out about DAI, about Maker, about what we do, who we are as a community. It's needed, in my opinion. It's really needed.
Thanks for the compliment, Frank. Yeah, we I don't know. There are definitely core units considering different mediums. So I guess that's a good suggestion. So if there are no more comments or compliments towards me, I guess we can move on along.
Yes, as always we can. So let's see what we got next. Anna, so do you want to give us an update on community development? Anything new this week?
Sure. I just got a few things this week. On Tuesday, a number of community members joined the community call with David to talk about the surplus buffer. And if you're interested in seeing the replay, here it is. I believe it might also be coming to YouTube later today. But you can check it out in Crowdcast as well. And then in regards to core units in community development, there's a working group currently called Governance Communication that's been publishing the Maker Relay, the snippets of this call, summaries, and now, like Peyton was saying, we also have a monthly recap of the governance process. So starting next month, we'll be experimenting with a new format to continue to provide more value with other updates that we already have, like governance at a glance and the MIPS update. And this month, we also had a trial experimenting with an audio format. So we had community members create updates in podcast form, and I believe now all 4 episodes are out, and you can check it out on Anchor as well as on YouTube. And that's all from community development this week.
Great, thank you, Anna. Once again, if no one has any questions, we will move on. All right, so I think that brings us to MIPs. Once again, I still have PSM update on the agenda for some reason. I don't think there's anything new there. So MIPs, let's see, have we got David here?
Yeah, I'm here today.
Yeah, cool.
All right, cool. I'm gonna share my screen for just a second. I think I need some
There you go,
permission. Yeah, cool. All right. All right, what's up, everybody? Happy February. Welcome to the weekly MIPS update. I'm David Utrobin. I'm a community development lead at the foundation and also a proposed MIP editor. And I've been working with Charles recently, and me and him have been, passing this potato back and forth. So let's get started. So first off, we are here. It's week 1 of February. It's Thursday the 4th. Green light polls from last month ended on the 1st, while the end of formal submission happened on the 3rd. And so just to really quickly wrap up this week's updates, Monday marked the beginning of the February governance cycle. Formal submissions just ended. The focus of this month should be to comment and help improve the proposals in RFC because there are no formal submissions this month. So take note. So these, I'm actually going to defer to long here, but I assume that the inclusion polls, the bundled governance polls, and the bundled executive kind of gets skipped because there's no formal submissions. So simplified governance cycle this month. We have a number of proposals in conception. I think many of these are like technically in RFC. They're just in conception because I'm waiting for Charles's advice on putting some numbers to these, but they are really interesting. There's the parameter proposal groups, MIP. It proposes the formation of a parameter proposal group similar to the rates group. The MIP-X streaming payments via the KEG. This is to supplement the technical KEG MIP. This just describes the process of actually utilizing it, stopping payments, the different types of payments, etc. There's also the MakerDAO multi-signature wallet management MIP, which also gives some requirements and standards around multi-sigs that would be recognized by Maker governance. And then there is a MIP on governance rewards, which proposes the creation of governance rewards that would allow the MKR community to reward MKR holders for locking their tokens in governance. So those are the conceptions, but RFC and scratch that 18 because I think I just forgot to update that number, but there is a lot. So there's the governance contract redesign. There is MIP 31, an active reserve AMM that was actually just recently updated by Alexis. I'm not going to read through every single description just for the sake of time, but I'll just read through the titles. MIP 32, the PEG stability module for compound mixed exposure. MIP 33, the Maker Stability Price module. MIP 34, the KEG Streaming Payments module. That's technical MIP. MIP 35, the PEG Stability module, compound mixed exposure with farming. So onward, we have the MIP 36, PEG Stability Compound Governance Die Leverage, which, by the way, a few of those are a handful of different similar MIPs submitted by Alexis. And so you could read about them on the forum. MIP 37 is Strategic Reserve for Governance. MIP 38 is part of a bigger MIP set for the core unit framework, which is MIP 38 is the DAO primitive state. It defines all the related core units, budgets, and facilitators. MIP 39 is the core unit framework itself. MIP 40 is the budget framework that's part of this core unit MIP set. Then MIP 41 covers the facilitator framework for the core unit MIP set. And that is it for the core unit MIP set. And then we have MIP 42, a proposed compensation addendum for MakerDAO contributors. This proposes an idea to basically compensate people with a percentage of their compensation in MKR. MIP 43 is a term lending module. This actually proposes a way for Maker to basically create fixed term positions. MIP44 is the reward join adapter. It's just a generic vault solution that can be applied to any token with a reward, with a farming reward, I think specifically. And then MIP45, really exciting to see this one come on the RFC. It was just submitted, but it is the liquidation system redesign, and so that was also just recently put up on the forum. These are all the sub-proposals in RFC. The ones highlighted in blue are related to the core unit MIP set, so just keep that in mind. And then the last two are a sub-proposal for core personal onboarding for MIP editor, which is actually me. But I have been informed that if the core units passes, then that whole sub-proposal process for onboarding the MIP editor becomes obsolete. So wouldn't worry about that one too much. And then the last one is the onboarding new collateral type backed by B protocol, posted by Yaron from B protocol. So that's it for the proposals in RFC. Also, I'm not looking at the chat. I'm going to look at the chat right after I finish reading this stuff out. And so, yeah, we have a few interesting pre-MIP discussions. There's vaults with liquidation ratios lower than the collateralization ratios. Conversation on that. There's a conversation on collateralization of commodities for purposes of financing duties and tariffs. And then there's also a conversation happening on thoughts allowing MKR DeFi liquidity providers to vote, what that would look like technically, and if that's even a good idea. So yeah, that's it for the MIPS update. Just a really quick snapshot on the collateral onboarding updates, because I know Charles throws these towards the end of the MIPS update as well. But yeah, those top two uni LP pairs passed the governance poll, and they are waiting for an executive vote. Both were, had a winning governance poll, so that's awesome. And then for this month's Greenlight polls, scratch the 3 days left to vote part. That's not true. Basically the list is there. I'm not going to read through every single one. And if I'm not mistaken, bear with me, the Greenlight polls for this month begin on the 15th of February. So the Monday of week 3, as you can see here on the calendar. Yeah, cool. And then with that, happy February. And I guess I'll just take a second to read the chat and see if there's any questions or comments or anything like that. And feel free, Long, to jump in if you have a quicker summary of what was being said in the comments, if it's relevant.
I don't think there were any sort of
Okay,
specific questions as we went along. Maybe there were a couple early on. But yeah, I would just kind of reiterate, I think March is going to be a largish month for MIPS.
Yeah, it very well might be.
So that's going to be interesting.
All right, well, in that case, that's my update, and back to you, Long.
Great, thank you, David. Yeah, I do think a couple of these MIPS going now are pretty kind of high impact, both in with the good and bad connotations of that, right? Particularly, we hit the governance rewards MIP, right, is one that's got the potential to make waves either in a good or bad way. And then there's also sort of all the others again, sort of changing how the DAO is structured and will function going forwards. So yeah, if there's ever going to be a sort of a month where we have extra sort of time to spend on reading and commenting on MIPS, this might be a good month. All right. So that normally my job is to do the MIPS submission review. There are no MIPS submitted, so thus no need to do the review. So still fairly early in the call, but I think we'll move on to Seb's financial presentation, and then maybe we can spend some time with a general QA and discussions. So yeah, go ahead.
Yeah, sure. Yep. Can I just share my screen?
Yep.
Thanks. Awesome. Okay, so I just take some numbers from Dune Analytics to have an understanding of what are the financial results of MakerDAO, because I'm quite interested in the money that the protocol is creating. And I always wanted to know how much are worth my MKR token investment, because lately the market is not super happy with MKR token, and they prefer some stuff like Aave or other stuff, I don't know. So I put some numbers, so I would try to discuss them a little bit with you. So keep with me and everything will be fine. So this is a monthly update. So you have all the numbers are for the months. So for instance, in January, we have generated $2.5 million dollars of net interest incomes. So I try to stick with terms that are used. Oops. Okay. Let me just put the comment in the right so I can see them. So I use the banking terms just like you will see in a banking quarterly annual presentation or annual presentation. So we have the same wordings than the rest of the banking community. So if you want to share this document with an investor, he will understand the terms, at least some investors. So the net interest income in a bank is the difference between the interest you get and the interest you pay to the borrowers, to the lenders. So currently, our main lenders are the DAI holders, and they are super happy to lend their money for exactly 0% interest currently, as the DSR is at 0%. So we have no cost on that front. So every interest we make is for us. So you see there is a huge increase since December. And if you compare to the increase since January 2020, obviously it's an insane number. The second line is a bit more difficult to understand. So the trading income is when you buy and sell something. And in a bank, you can buy and sell currencies, but you can also buy and sell securities like stocks, bonds, and all of that. And in that line, I put the PSM, which is exactly trading, because we buy USDC for 0.1% less than what it was, and we sell DAI for 0.1% less more than what it was. Let's do opposite. But for the December, you see there is a big number, and it's not the PSM. I just put all the USDC A vault, USDC A, USDC B, TUSD, and all those that have no liquidation on them. So USDT is not in them, but USDT is not a big deal anyway, so it's not significant. So you can see that the income is decreasing since last month, but obviously the only reason we had, oh yeah, I can share the presentation right now if you want. If you want a better capture screen. So trading income is all the USDC A vault, and that's relevant because the only reason we can make interest on those is because DAI was above $1. There is no reason for someone to lend to put $1 of collateral to get less than $1 of a loan. And this was not a good reason to make money. But with the PSM, it's a bit different because it's a good reason to make money because the DAI peg was great all along January. So it's still a good amount of money. The third line is net liquidation income. So that's the difference between the money we create when we liquidate someone and the money we lose when the liquidation fails and we lose some money. So we don't have the split per vault. It's monthly. So there is one number when it's every month I have only one number. It's positive if it's a win, and it's a negative and if it's a loss. And yeah, exactly, that's a huge, I didn't expect that, but yeah, 6 of the revenues last month were due to liquidation income. And lastly, that's a new line, the first one that is used. It's the workforce expenses, but in fact, all the expenses you can have. And currently, there is only the vol compensation working group, which is here. And then you add up those numbers and you get the net income. And just below, I put the recurring income because you can expect that the trading and the liquidation fluctuate month over month. And we can hope that liquidations are not a big number all the time because that's not good for the customers. And so recurring income is what we can expect to earn in the near future. So this includes the workforce expenses. So this is the same representation, but in a graph since November 2019. You can see the workforce expenses. So you have a small, very, very little line here. Maybe this will grow soon. You have the net interest income, which was significant early 2020. Then it was zero because the interest rate was zero because we had the DAI issue. Then we raised them again, and now we're making a lot of money. Net trading income, it's mainly the solution we had to solve the DAI price. So we made a lot of money. And it's interesting to remove them because if you take the aggregate, you think that we make the same amount of money every month since October. But that's not true because the net trading income was due to the PEG issue. And if you remove that, you see that the net interest income is growing month after month. So that's very good for our business. And obviously, that's the sad news. You have the net liquidation income that is positive most months, but there is one little issue here that cost us a lot of money. Yeah, I hope liquidation 2.0 solve that. So now zoom on the lending business, which is the net interest margin. So the income is 2.5 million last month. It will be way more in February. You have the average yield. What you have interesting is here just a presentation. You see that East A is still the biggest vol type, and the rest of the revenues are not marginal, I would say, but not so much, except maybe RABTC. And you have the average yield we make on the loans we provide to our customers. So that's rising, and it will continue to rise on February. And even more because we will increase the rates. So that's not much to tell about it because there was only good news here. Trading income, as I said, it's all stablecoin vaults and the PSM. And I expect the PSM to increase in revenues, so that will be good. Currently, I checked the main user of the PSM is still 1 inch, but maybe other people will use it. And obviously, I put it in a specific slide because I think the trading business at some point, probably not this year, but at some point, can be significant for me. The liquidation business, so that's everyone understands that we made the big loss in March last year. So probably at some point we will add another slide, which is the Oracle business, when we can start to get some revenues from that, and we can add other ones. One side that is super important, in my opinion, and maybe we don't focus too much attention on it. The only reason we make a lot of money is because DAI is valuable. Because people are lending us money with no interest. So if the DAI demand increase, at some point we will be able to invest all this capital to some things that create money. That's not the biggest issue. The biggest issue is to have people that lend you money at 0%. That's not super easy to find. So I focused on the stablecoin on-chain volume in billion of dollars transacted. So you have the increase of all the stable coins since the beginning. Obviously, a lot of USDT. And you can see there is some slight difference. And on orange, you can see DAI. If you do a market share analysis, you see that we started very low. At this point, there was probably also some size, so it's not super relevant. But you can see that sadly, after March, we lost a huge amount of market share because probably people were not super happy with what happened on Black Thursday. Then there was the yield farming season. Then it dropped again. I would suggest it's due to the peg issue. And since we have solved the peg, it's raising a little bit every month. We have also a decrease in USDT, but many people from USDT are moving to USDC or BUSD. And here you have more numbers on the different evolution of the market share. I think that's important, and I would say that the main focus for makers should be to increase this 12% to, let's say, 50%, something easy to do. Another slide that is important, and we should focus on that as well, but you have pretty much to do that, is to focus on the risk. So I wanted to express the risk the protocol face by using the surplus buffer and making it comparing it to the total amount of loan or the total amount of the assets we have. So we have 1.7 billion of assets, and we have 26 million of surplus buffer. So if you do the math, you can figure out the leverage ratio, which is just the surplus buffer divided by all the assets of maker. And you end up with the blue line, which is, as you can see, it has improved. It was quite high before Black Thursday. Then there was Black Thursday. It improved a little bit because we have raised the surplus buffer many times. But if you can see here, it's decreasing the last months because the demand of ETH loans, mainly ETH loans, is growing way faster than the surplus buffer. And that's the issue. I put another matrix, which is more important, depending on what your stance is on USDC, is what is called in the banking the CET1 ratio for common equity. I don't remember the last symbol. But it's basically, you are using the same thing, surplus buffer divided by the risk-weighted assets. So you say that not all assets are equal, and you put some ponderation for all assets. And in this case, we don't have work on it too much, but I say that all assets are weighted ×1, except stablecoins, which are weighted 0, because there is no risk in USDC, but you can disagree on that part. And the ESB loans are more risky, so I put a factor of ×2. And you get this red line, yes, tier 1. Thanks. You have this red line that is growing a lot, because the difference here between the blue line and the red line is because we had onboarded a lot of USDC tokens. So that's not super risky. There is a systemic risk or regulatory risk, but not day-to-day risk. And if you see at the end, it's dropping a lot since October, because while the asset size is not growing that much compared to the surplus buffer, actually all the stablecoins are slowly disappearing, and we onboard more risky assets like ETH loans. And so there is a sharp drop in the last months. So that's maybe something to have in mind. And just to give a little bit of context, in general, for banks, the leverage ratio should be 3% at least, and the CET1 ratio should be 8%. But again, we are not a regular bank, so we should work to see what is really relevant to us. And the last slide that is interesting for all the maker token holders is taking the same numbers but applying them to the MKR token, per MKR token. So you have the recurring earnings per MKR, so on a monthly basis. So you see that on, I'm not sure it's on the, that's monthly. On January, for each MKR token you hold, you made $2.5 of capital, because the capital stayed inside the MKR token. That increased the surplus buffer, but it's still yours because you have the right to say that all the surplus buffer can be given in DAI to the MKR token holders at some point. And you can see that the raise is quite interesting. And the second, the orange line is the recurring earning yield. So that's annualized. And it's the earnings on an annual basis divided by the price of MKR it's the average price of the month. So you can see that obviously when earnings are rising, this line is already rising. But sadly, or luckily, in January, this line is decreasing because the MKR price tripled. But the MKR price tripled, but as you can see, the earning yield still stay about 2%, which if you want to use the price earning ratio, the price earning ratio is just the opposite of the 2%, so it would be a price earning ratio of 50, which is still good compared to Tesla and all those and all protocols. Yeah, so that's about it. So let me know if that's interesting to you and if you have some questions.
Great presentation.
Yeah, I think we can speak for everyone when I say everyone's was very appreciative.
Yeah, so the question is, should I continue next week, next month, or stop it? It takes, I would say, half a day. Okay, yeah, I got the answer.
Yeah, yeah, I think everyone's quite keen. Great. Does anybody, I guess, want to have any questions or comments, I guess, that they want to share with Seb? I guess maybe I'll kick one off. So obviously, a lot of the increase in revenues has been, I guess, correlated at least with the general bullish sentiment in crypto, right? So yes. Obviously, always hard to say, but I guess how much of this revenue and this kind of usage should we expect to stay if the bullishness of the overall space decreases, I guess? You can't really answer that, but you know.
Yeah, no, I don't have any answer. But what I want to say is that maybe we need to work on one subject, is to know on our liabilities we have 1.7 billion DAIs outstanding. How much is used to farm or to get to farm or use on protocols and all that, and how much is used by what I would say real people. People using it to get a salary, to pay something, and not to speculate. Because obviously, like everyone, I have some DAIs in some protocols to earn a yield. But if there is no yield, I will not have the need to have those DAIs because I will have ETH, obviously. So it's difficult to know, but that's super important to know because currently we have 1.7 billion DAI. So we can earn a yield. It's let's say by default you can think you can earn 2% on the amount of DAI outstanding. But if this 1.7 billion decreased to 100 million, that's a different story. And the minimum is what is the amount of DAI used by non-farming activities.
So
yeah.
So one other thing I guess I've kind of noticed about that is that, or about the space in general, like if you go to like the Etherscan tab for DAI, right, like the top of all these addresses, right, are various pools for various things, right?
Yeah.
The fact that they're liquid, so this is essentially what you're saying, right, in terms of the farming, but yeah, like one thing I say is like a lot of the demand, I guess, comes from liquidity pools, and in the case of like stablecoin liquidity pools, especially, like I'm not sure how like sticky that is. I guess is like in the case of like that if there was bearishness, right?
I think the curve or the Uniswap can be sticky because you always need to translate ETH to DAI and the opposite. But some others like Barnbridge and other like that, or even to all the algorithmic stablecoins. I'm not sure there is still one, but there was a lot of farming activities on those. Those will disappear. There is no point.
Yeah, it makes sense.
And that's really what we need to focus, because we focus a lot of onboarding new collaterals and providing products. But what matters at the end is to have people happy to hold some DAI. Because if they switch to USDC, we are dead.
Yeah, I think the focus on product is mainly in the default, right, because of the issues with the DAI pick, right? Like up to this point, demand has been exceeding supply, which has been great. But that's not necessarily always the case, as you're saying.
Yeah.
Since this sort of a couple of good points in the sidebar, does anybody want to share any of those?
Just have your comment about what people are using DAI for. I mean, hopefully it's liquid. Hopefully it's a medium of exchange, right? And in that regard, if it trades at its peg, you'll never really know who's farming and who's just using it per se in the real world. The mere fact it can be farmed is a spectacular use case, and ultimately that who knows what else it'll be for. As far as the question before that one about, is this general valuation of MKR, attributed to the crypto rise or something else? At the end of the day, I hope it's driven by earnings and some cash multiple, a multiple of earnings thereof. I mean, right now it's trading, at least my metric, at about a PDE of about 38, 39. And it's been going between 30 to 40. The more assets, the more collateral we bring on, indifferent, ultimately, ideally indifferent, completely uncorrelated to the crypto market as a whole. The more real world assets, the more collateral we can bring on, the more earnings we'll have, the more of a valuation we get, because that multiple hopefully should stick in that range.
Yeah, actually, but I see in the chat that Chris is saying that he has a large position used in the real world, but if it's in the real world, this is no longer DAI. So he had to sold the DAI to other people. And it's the same if we integrate real world assets, the DAI will stay in DeFi. So we need some people to have DAIs on their wallets. And the most sticky reason is to transact. When you want to buy a coffee, everyone has a wallet, a real one. I don't have one. And you need some cash inside, because when you do a transaction, you need the money directly. And that's why you want to have some DAIs, some reserve of liquidity. But for that, we need to be the winner on the volume transacted. Yes, there is a comment that the DSR stimulates holding. That's something I think we will try in the near future. If I haven't looked into the senior request, but I think so.
So again, seeing a lot of good comments. If anybody wants to put these in the recording, that might be good. Maybe Greg or Chris.
I can chime in quickly. I just, I think if you look at DAI's structuring behind the scenes, it's not as conducive to payments as something like USDC. It's going to be very, very hard for us to beat them at that game because they have unlimited liquidity from the legacy system. Now we have that in theory, but we have to use USDC to get it. So it doesn't make too much sense to have people onboard to USDC to onboard to DAI and then use that as a payment currency. But for savings, DAI can beat all of them. And then the way I think of it is you start a cycle. So you need to fill all the functions of money. You need a unit of account, a medium of exchange, a store of value, but you need to pick one to start with and get a sink into that vertical. And then once that builds, you can have the other ones come organically. And I think the one that we build a sink with is savings.
Yeah, I can add here. I think there's a big usage for DAI in structured products, especially once the DSR comes back. I mean that's a project I'm working on as well, and I think more people will be working on it. Is using DAI and DSR in structured products, and that could stimulate a lot of demand.
Yeah, and I think like the farm, you kind of view it. Yes, it's temporary. Yes, it's obviously going to go away at some point. It's unsustainable, but you can kind of view it as subsidizing our DSR in a way. It's sort of like a DSR. You're getting savings return, and it's going to eventually go away. Yes, but we can replace it with the actual DSR when that happens.
Yeah, but in that case, it means that the DSR is above what is natural market rate, the risk-free interest rate of the market. And if it's above, this diminish our spread between how much we borrow and how much we lend. So I'm not sure at the end it will work super well, because.
But isn't that our whole advantage here, that we can cherry pick collateral with high margins, and then basically as long as we can offer a percentage point over LIBOR, we'll be the highest high yield on the market.
Yeah, but making more risk. I mean, what is the difference between a competitor that can do the same? Now a Circle is offering
our competitors
a saving product at 10%.
Like they can do that by adjusting the risk profile of the investor. Like, even when you compound, you're going out on the risk curve. DSR has no liquidity constraints. And I think that's going to be very attractive to some of the larger integrators.
Yeah, sure. But at that point, this will reduce significantly our revenue, our net income.
Yeah, but you get a smaller piece of a bigger pie, is my perspective.
It's a wonderful problem to have.
All right. So maybe that about wraps up the discussion on that. Though anyone's again free to interrupt. Maybe we'll open up more widely if anyone has any questions, comments on anything else we've talked about in this this week, or anything else in general. Yeah. So I guess Lewis just made a point in the sidebar, talking about how the gas costs obviously hurting everyone on Ethereum, but also the kind of use case for DAI as kind of for payments and store value. I mean, I think it was in the last meeting or the meeting before, we kind of discussed some of the things we might want. Yeah, so saying like maybe we need like an L2 core unit sooner rather than later, I guess.
But yeah, Seb, you mentioned you were going to bring something up about complexity?
Yeah, we can discuss that a little bit. So I had a call, thanks to Frank, with some Aave investors, and I tried to pitch them Maker. It was quite interesting, not so much because I didn't really succeed. I succeed partially, I would say, but because the understanding of Maker, because we are in Maker every day. At least that's what the forum is telling me. But for an outside investors, they don't see the same way. For instance, the first thing they said, the first thing they said was that, so I tried to explain how Maker works because they said that it was too complicated. I say Aave is a marketplace, borrowers and lenders. In Maker, we don't have the lenders because we mint DAI. So that seems super easy to me, but it's not for other people because I say, wait a minute. How can you take all the interest? Because at the end, someone has to lose. And they understand that the DAI users are not paying or are not getting fees. But then the reaction is, wait, it's not good because if you don't have DAI anymore, you're done. If I invest in Aave, there is always new token. If DAI disappears, that's not a problem. If USDC disappears, it's not a problem. So this was the first action. And I tried to tell them that, okay, but you make a slight margin on Aave, or none at the moment. And this wasn't a big deal because obviously in their mind, Aave was the leader in the money market. And if you have a small cut on a bigger market, it's not a big deal. And there is almost no risk because even if USDC disappears, Aave will stay. So I try to say that it doesn't exactly work like that because it's easier to duplicate Aave than Maker because you don't have to build the trust in DAI. Yeah, good question, Akiva. Akiva is asking if Aave tokens even have legal rights over the platform. That's another question, for sure. So that was about it. They prefer a marketplace because it's easier to understand and you don't have a token risk. And I told them that Maker is creating money and burning some MKR token, while Aave is creating Aave token. And I thought that was a good point. I mean, what is the interest to invest in a protocol that is deleting you every day? But this is not a very good argument in DeFi, I would say. People don't really care if you are burning MKR or if you are minting MKR. I think it will change at some point, but currently not. The other point they made is that we should use chaining oracles. And I was, what the fuck? I mean, we already have some oracles. And the guy was saying that, yeah, but I don't know how that works. It's super unclear. And there was a problem last month. It was, yeah, okay. The problem was no update for 30 minutes. I'm quite sure Chainlink has a lot of issues as well. And yeah, but Chainlink, we understand Chainlink. Everything is public, transparent. There is an understanding. And maybe we lack the fact that we have the information, the marketing. As always, it's always a question of marketing. They don't know, they don't come to the chat, they don't see the forum, they don't have time to understand. It should be super easy, a super dashboard. And I told them that Oracle is not an issue because we have customers and new customers every month. So if we are so bad, how is it possible to have new customers every month? But yeah, this don't work well neither. So that's about the feedbacks I have for that. Oh no, what thing that was super interesting was that one of the investors always borrow DAI on Aave, not DAI, USDT. And I thought, what's the point of using USDT? And it told me a simple reason. It's a good put option because if USDT crash, as he borrow USDT to buy something else, there is no risk for him. As USDT can only go down, not up, or at least not usually. It can go down. So if it goes down, his loan decrease in value. So that was another reason for using Aave and not Maker. But one of the guys was super interested because he can put some loopring tokens because we have a vault. Aave doesn't have one, and it's only 3%. And on Binance, it cost him 2% per day, and not 3% per year. So that was a good selling point. So if you have some questions as well or some comments, I know not everything makes sense, and I think we should work a little bit more on marketing and stuff like that.
I think a good step is to present your presentation. I mean, the numbers speak for themselves. Like,
yeah,
I sent them the presentation.
Yeah, I sent them the presentation before, but they didn't want to speak about the presentation. And it couldn't work because I was making, we are making a lot of money. But they were telling that Chainlink is making almost the same amount, and Aave as well.
Chainlink from what?
Is that my question?
Like price appreciation?
No, from something. I don't know what, because I never studied Chainlink.
They make no money at all, like zero.
They're losing money, right? Like they're subsidizing their fees.
Losing money on the gas cost. 100%.
Yeah, but it's not easy to see that if you don't look in detail. And even for Aave, he told me there will be some origination fee of 20 bips per loan. So I don't know if it's true or not, but it's correct that if there is 20 bips per origination fee, and you multiply it by the loan originated in last quarter, it will be 20 millions per year, or 20 millions per quarter, I don't remember. So we are making 60 million. Aave will make the same, it's not a big issue.
What are they making that from? The loans?
Origination fee. I don't know exactly because I haven't studied Aave as well. For me, they are not making anything except flash loans.
Yeah, flash loans actually will be our only temporary source of revenue. Yeah. They will go to zero eventually as these new tokens come online, like the DAI Flash Mint module, and even WETH 10 is likely going to have zero fee, infinite liquidity minting. So there's no cost for providing this. So market competition will just drive flash loan fees to zero.
But what is the plan for Aave?
I don't know.
Yeah, but we need to understand the competition to discuss it. Yeah, exactly. We need some competitor analysis because it's too. I don't have too much time to see that, but I mean, everyone is investing and thinks they are making a lot of money. Someone is wrong. And I hope it's not us. I'm quite sure it's not us.
Look, I mean, the entire space can't use Chainlink oracles, right? I mean, oracles are a systemic risk. We need lots of diverse competition in oracles. The best code I've seen uses our oracles and a fallback to Chainlink's oracles. There's no way we want to put all of our eggs in one basket. It's just crazy that people think that we can go to Chainlink oracles.
Out of interest, he's using ours with Chainlink as a fallback?
No, I think that was one of the Wi-Fi contracts that I looked at.
Oh, okay, cool. All right, so we're maybe approaching half past the hour, so we should perhaps think about wrapping up. Unless anyone has some final points or anything they want to make about Maker, or I guess any of our competitors. All right, seems like not so much. So I think we'll, I guess, leave it there for this week. So yeah, I guess thanks everyone for coming, and I'll see you all again next Thursday.
See you next week. Bye bye.
Thanks, guys.